First of all, can I say how really pleased I am to be back in Cyprus. It's great to see you all looking so optimistic, and I'll soon deal with that. I also would like to thank you all, each one and every one of you personally, because a few years ago, it's quite a while ago, I was giving a speech at Posidonia in Athens in the Intercontinental Hotel, which you'll remember is a very big hotel, and the Greek Prime Minister opened the event and had all the cameras just like there, and he gave his speech and he left, and the whole audience left with him. You know, we were sitting at the front, sort of saying, "Is there anybody out there?" So I must say, I get round a lot of places in the world, and I can't remember seeing a more positive, enthusiastic gathering than you have here today. So I think this is just brilliant. Anyway, I have a few things to say about this. The last couple of years, I've been trying to avoid talking about the dry bulk market by talking about smart shipping and digitalization, which I believe is the future. But George changed my title to the market again, so I'm going to talk to you about the market. And I've got a few things. First, I want to talk about the shipping cycle, which seems to be getting longer. And I think this is, well, I'll go into this, but I think we're past the trough of what looks like being one of the longest cycles for many, many years. In fact, I reckon since it could end up being the longest cycle since 1845. So it's a long haul. But past the trough, you can start to think positively about what happens next. And I think that's really, now is the time to be planning where you go when the market is back to normal again, which it will do, it always recovers. I'll talk about sea trade growth and the world which is changing. We all, I think, have a feeling that that's happening. The world is going to be a little bit different in the next 20 or 30 years from what we've been used to. And again, change, none of us like it, but you've got to do it. Shipyard capacity is still with us. There's a lot of it out in China and Korea. They're having a hard time, but they're still building ships. The zero emissions and the carbon footprint issue is something, not Mr. Trump may not agree with it, but I think it's going to be very hard to get that off the agenda for ship owners. Luckily, it doesn't move very rapidly, but I'll have a word or two to say about that. And finally, the digital revolution, which I think is a chance to move not the ships, but the way we use the ships on to it's a sort of a revolution in the way that, you know, VLCCs were a revolution. I mean, this month, 50 years ago, the first VLCC was on its maiden voyage, you know, and since in the last 50 years, we've seen that whole era of shipping grow up and mature. But the naval architects and marine engineers haven't got many clever solutions in their bags anymore. I know we've got DNVGL here to talk about what we have, but I think the digital technology is the future technology, and that's what we all need to think about. And the more I go into it, the more difficult I think it's going to be for the shipping industry to make that step. We have a very long and big step to make, but when it's done, it will be a transformational event, I think. Well, let's start with the shipping cycle, which seems to be getting longer. This is the Clarkson index. That's an average of tankers, bulk carriers, container ships, and gas. This is 25-year spell. For 70% of that 25 years, the market's been below average. Most of the money came in about 4 years in the middle of the last decade. I think the moral of this story is you really want to be careful you don't sell out just before the big boom starts, you know, because that's very disappointing. You can't be a ship owner if you haven't got any ships, and this is a market which pays its money infrequently, and really the prizes go to the people who stick it out through the long troughs. And this trough looks like it has been a very long one. If we look at the length of cycles from peak to peak. That's from the beginning of a peak to the beginning of the next peak. This chart, it's a little bit complicated. It shows you, it plots the length of cycles in years since 1741, I think. And this one, if it goes on, if the market finally recovers in 2021, which I think is a plausible scenario, there's still a bit of, of slack there, then this cycle will have lasted 17 years. It's a long time. And the last time the cycle lasted 17 years was 1845. But the great thing in this cycle is the banks have, the interest rates have been very low, so it's taken a lot of pressure off the owners. And it's also made it much more difficult to do asset play because there's been less pressure from banks to sell ships regardless of the price. I mean, the second-hand prices have held up reasonably well because of that situation. I think we've got about 18% surplus capacity still in the fleet at the moment. This is the global fleet, and the grey area on this chart shows you the surplus capacity. That's what I call the shadow surplus. It's everything, including slow steaming. And the layup this time has been very low indeed, with a tendency to keep the ships at sea, trade them slower. Whereas if you look back to the 1980s, what happened was a lot of the ships got laid up. The banks on the whole didn't mind the ships getting laid up. And there was still some slow steaming. So I think really the reason I see it's going to take us a while to get out of this recession, still to get to really good markets, is that we have to get rid of this 18% surplus. The tankers, why has it been such a long recession? Well, I think as in most recessions, we've had a lot of counter-cyclical ordering. This is the tanker chart, and the red line on the chart shows the tonnage of orders. And if you look at that red line, you'll see that we've had very heavy ordering of tankers in the period since the recession started in 2008. There was 5 years of very heavy ordering. And as a result, this year, next year, and in 2018, we're going to see quite a heavy delivery of tankers, which is going to take the edge off the market. The demand's not that brilliant. On the bulk side, we have finally moved into a position where the counter-cyclical ordering has stopped. But it's an amazing fact that in 2013, there was orders placed for over 100 million tons of new bulk carriers. That was 5 years into the recession, and that is as much tonnage ordered in 1 year as was being ordered in the 1990s and the early 2000s in 5 years. It's an enormous influx of tonnage. So I think you've got to look at the reason this recession's dragged on is that we've had a lot of investment. I think we've come to the end of that phase, but what we're going to see is we have to work through the surplus that's been built up. Well, that's one aspect of the markets. The other thing that's not been helping us very much and has been dragging this recession out is the slowing growth of sea trade as China's matured as an importer. And as the world economy has had a pretty bad run since the recession, since the Lehman Brothers crisis in October 2008. This chart shows you the industrial production growth rate in percent per annum. And if you just look back to 2007, 2008, world industrial production was growing at about 5.5% to 6% per annum. This year it's down to about 2%, and most years since the crisis started, it's been in the band 2 to 3%. And industrial production, more than anything else, tends to drive the seaborne trade. So slow industrial production doesn't help As a result of that, the growth rate of seaborne trade, which was growing steadily at 5 and 6% during the period when China was booming, that has edged down, and this year we think the growth will be 2%. So it just slows things up a little bit. It's still at 2%, is still a lot of growth. At least it's growing, but it's growing slowly. We have now 10 billion tons of cargo traded. That's basically nearly 2 tons for every man, woman and child in the world. Shipping is still a core business for the world economy. It's absolutely at the heart of the development of the shipping industry, but the regional structure of trade is changing. And for me, this chart really tells us where we've been and where we're going. If you go back 50 years to 1966, the OECD countries, that's the United States, Europe, and Japan, accounted for 77% of the imports by sea in the world. Today, that's down to 37%, and it's falling at a rate of 1% per annum. Meanwhile, at the same time that Lehman Brothers was collapsing, the non-OECD countries overtook the OECD countries, and they are now 67% of seaborne trade. And what we're looking at right now is a position where the old sort of east-west, all the trade is between Japan, Europe, and North America. That whole regime is yesterday's regime. And we're seeing this in the change of attitude to protectionism. I think Mr. Trump's stance in the States has something to do with this. And most importantly, I think the next phase of growth is going to be within the Asia area. Not China. China's still growing, but I think many of the countries in Asia over the last 10 years have come to a stage where they are now substantial economies. Vietnam is a classic case here. And if you put them together, the non-Chinese, non-OECD countries in Asia are as big as China, and they're growing at the same sort of rate as China. So I think looking ahead, we all have to look for new customers, new relationships, new trading relationships, and I think the sort of patterns of trade that we've been used to in the last 50 years are going to change. One of the signs of this are the trading blocks. Mr. Trump was famously pulled out of the TPP. This is the block on the left, so that's hangs on the left. Yes, it is on the left of this chart. He's pulled out of that, but there is another trade bloc, the Regional Comprehensive Economic Partnership, which is really just about tariffs, and their aim is to get the tariffs down within that area. And again, I think that hasn't quite happened yet, but it's part of a movement that I think will see China's One Belt, One Road, which you're going to have a lecture about later on today. This is the Chinese want to invest around the South China Sea. They want to develop infrastructure, ports, inland transport. Cyprus is very well positioned to interrelate with this area. It sits between the Atlantic and the Pacific, and I think this is where it's time to get on the plane and make some new business relationships, as far as I'm concerned. And of course, the shipping industry is way ahead of the curve in this sense. 80% of the fleet is now red flagged out, according to our statistics. That's the red line. Shipping is trading internationally. It is a vital part of this new economy, and I think it's great to see Cyprus standing up and getting ready to take your part in leading forward the next 50 years of development. Forget about the cycle. Shipping is more than cycles. It's about delivering the world's trade. If we move on now to our good old friends, the shipbuilders, they're still at it. China's top dog now, pretty even with Korea. Japan is hanging on in there, doing some very nice eco ships still. they built up the capacity. It was a fascinating story. They first, in 2004, they filled up all the existing yards. Then they started planning new yards and selling the capacity. All that capacity came into operation in the 5 years after Lehman Brothers. So the big growth, as you can see here, of shipbuilding deliveries was in the 5 years after the Lehman Brothers crisis. And you'll notice that nearly all the ships that were ordered were delivered in the end. We had a big debate. Shipbuilding contracts proved to be very difficult to cancel. And so the ships are delivered. What's happened is not only were the ships delivered, but world consumers were delivered 10 years of very cheap freight, you know. Well, in a sense, selling a product cheap helps to encourage trade. It's not a bad thing. It helps to keep the world moving along, so I don't think one should be too negative about that. The shipyards are still in there hustling. I mean, they produced 100 million tons of ships last year. They're going to produce about 89 million tons this year, and there's another load to come in 2018, so it wouldn't be long. I don't know, you order a ship, you can't be a ship owner if you don't order ships. You get a new state-of-the-art ship on very good terms at a very good price. Do you order it? You're the guys. It's a decision, but I think, you know, it is part of cycles. I mean, I study shipping history. Every generation of successful ship owners for the last 2 centuries has taken advantage of market troughs to build up their fleets. It's what you do. Troughs are part of the business, you know. So you shouldn't, you know, you need to take a long-term view. Just make sure you've got the balance sheet to support it. And I was absolutely delighted to heard something last night I never believed I would hear. Recently, I haven't heard a European bank announce they're interested in doing more shipping business for 6 years, and I heard it last night here in Cyprus. So I think congratulations on that too. It sounds like the credit terms are going to be quite tough here. Well, okay, let me, the zero emissions, the problem is they want us to run the merchant fleet, all 106,000 ships without any emissions. We can't do it, you know. But the trouble is, if we keep growing trade like we have in the last 25 years, then we're going to have, in 50 years, we'll have 50 billion tons of cargo, and we're supposed to do it with no emissions. I don't know what the solution to this is. You know, the diesel engine is here to stay. LNG is helpful, but it's still a carbon-based fuel. It still does emissions. The positive thing here is the politicians take a long time to make decisions about this sort of thing. So I'm not going to dwell on it. It's just one of those things that is here to irritate you all. And I hope, for the sake of our grandchildren, you will all do everything you can to help. And I think the one thing you can do to help here is to, it's not about ships, okay? They can't help you build a better ship. But, you know, some of the biggest things that have ever happened in shipping have not been about ships. They've been about how we manage the ships. 50 years ago, last year, Malcolm McLean was launching the first container service. That wasn't really about ships. It was about how you organise cargo. It was deciding to put cargo in a box in order to make it easier to transport, to make it more efficient. It's worked miracles. And I think we need to manage our shipping better. And we have today a range of digital technology which will enable us to do that. How will it help us? Well, for 5,000 years since the Carina ship sank, you know, the tradition in shipping has been that each ship has been a single business unit. It stands alone. The master is the boss of the ship, and on the whole, you know, he managed that ship, and you couldn't do much about it because you couldn't communicate with him. And that meant that a big company, if you've got 50 ships, you're still actually running 50 little companies. Each little company, ship is one company. If you look at how BMW build cars, everything is minutely integrated. And I think that the digital last year in March, Inmarsat launched the Fleet Express system, which in principle gives you global coverage of 4G communication, which is a big step forward. It doesn't, I don't think it works totally yet, but it will work. In the next 5 to 10 years, in the time you're sorting out your systems, the technology is going to work, the satellites will work. And so I'm not going to dwell on this too much because I see I've run out of time, but there are 3 ways you can use this technology, and I'll finish on this note. The first is that you can do smart ships. In other words, you manage your ships better. You're all familiar with preventive maintenance, this sort of thing. The digital technology, if you can make it work, will help significantly. 30% savings is what they found in industry when they put this sort of automation technology in. And I'm not talking about no crew. I think shipping is about people. This is about managing, not how many people you have on the ship. The second thing is you can use this technology to manage the fleet of ships like a transport factory. Instead of running 50 individual ships, you leverage off them. I mean, one interesting thing here is, if you've got 20 ships, you've got 3 or 4 managers on every ship. These are expensive guys, some 100K a year. That means you've got 60 expensive managers on the ships. Are you really using them? And so I think on that particular note, and then there's the logistics, which we never did before. I've run out of time. I'm being flashed at from the back, so I'm going to stop. But I think we have to look at our business model. We have to try and use our ships better. We have to try and go down a very long, difficult road of making the technology work better. And on that note, I wish you all luck, and I think this is just fantastic, and thank you so much for inviting me. Thank you.